Welcome to Earnings Central. In this video, we'll break down Walt Disney's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. Let's get started. Starting with top-line revenue, the original estimate for Q4 was $22.49 billion. The company actually reported revenue of $22.57 billion, surpassing expectations slightly by 0.36%. This quarterly revenue also marked a 6.3% increase compared to the $21.24 billion reported in the same quarter last year. Moving to adjusted earnings per share, or EPS, the original estimate for Q4 was $1.11. The company actually reported an EPS of $1.14, exceeding expectations by 2.7%. This result also reflects a major 39% increase compared to the 82 cents reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First up, Disney Plus Core and Hulu have reached a combined 174 million subscribers, showing impressive growth in the streaming space. This is a major milestone for Disney, achieved in just 5 years since launching Disney Plus. The Parks and Experiences segment is showing encouraging signs of consumer strength, especially in the domestic market. While there's been some temporary softness in international parks, particularly in Shanghai and Paris, with the Olympics' impact, the overall trajectory is positive. Looking ahead, Disney expects the Parks and Experiences segment to grow between 6% and 8% in fiscal year 2025, despite some early headwinds from hurricane impacts and cruise ship launch costs. On the streaming front, margins are improving significantly as Disney continues to optimize its direct-to-consumer business. The company is particularly excited about its advertising performance, which grew 3% in 2024. What's interesting is that they're seeing strong results in both traditional linear TV advertising and streaming, with their proprietary ad tech stack giving them a competitive advantage. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The headline announcement is that ESPN's flagship direct-to-consumer service will launch in early fall 2025. This isn't just another streaming service. Disney is reimagining ESPN for the digital age, with AI-driven personalization, integrated betting features, and what Bob Iger called ESPN like it has never appeared before. Disney's movie business is firing on all cylinders, with Inside Out 2 and Deadpool and Wolverine leading the box office. What's particularly interesting is how these theatrical releases are creating a multiplier effect across Disney's ecosystem. When a new movie comes out, they're seeing significant spikes in streaming viewership of related content. For example, as Inside Out 2's trailer released, they saw increased viewing of the original Inside Out on Disney Plus. The company is also getting serious about password sharing, expanding their crackdown to approximately 130 countries, with Latin America being the latest addition this week. This move, combined with their focus on streaming personalization and improved recommendation engines, shows their commitment to maximizing the value of their streaming platforms. Looking at content strategy, Disney is taking a measured approach to international expansion. While they acknowledge the importance of local content, especially in EMEA and APAC regions, they're being strategic about investments, focusing first on perfecting their technology and reducing churn before making significant content investments in these markets. The company's Experiences division is set for expansion, with multiple exciting projects in the pipeline. They're about to unveil the Disney Treasure cruise ship, bringing their fleet to 6 vessels, with 7 more ships currently in development. They're also working on various park expansions across their global locations. One interesting insight from the advertising side is that about 60% of new streaming subscribers are choosing ad-supported tiers, with 37% of U.S. subscribers and 30% of global subscribers now on ad-supported plans. This trend aligns with Disney's strategy of using pricing to encourage more viewers to choose ad-supported options. In conclusion, Disney appears to be entering a new phase of growth, with a clear focus on streaming profitability, strategic content investment, and continued expansion of their Experiences business. Their ability to leverage success across multiple platforms, from theatrical releases to streaming to parks, demonstrates the unique strength of their integrated entertainment ecosystem. That wraps up our recap of Walt Disney's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.